Sub-Saharan Africa's leading bourse, the Nigerian Stock Exchange, hosted its review of the 2017 market year and also shared what it sees as the outlook for the new year 2018. Giving his remarks, the CEO of the Nigerian Stock Exchange, Mr. Oscar Onyema, gave an overview of 2017.
The NSE Banking Index emerged as the NSE's top-performing index of 2017, buoyed by strong corporate earnings reports by the sector's key players. The index posted returns of 73.32%. Coming in a close second with one-year returns of 70.33% was the NSE Pension Index, which tracks the performance of the NSE's top 40 companies by market capitalization and liquidity in accordance with PENCOM guidelines. The Premium Board continued to demonstrate the appeal of strong, transparent, listed companies to global investors, closing as the third best performing index of the year with 51.23% returns. All other NSE market indices recorded positive returns except the alternative securities market, which posted a decline of 8.9%. Equity market activity skyrocketed from 2016 levels as market turnover increased by 121% to 1.27 trillion naira. For the second consecutive year, domestic investment flows outweighed foreign portfolio investment flows, albeit marginally. Overall, the domestic retail segment recorded the least growth during the year. As at November 2017, the value of domestic retail trade totaled 364 billion naira, which represents a modest increase of 39% from the previous year, compared with the triple-digit growth recorded in all other investor classes. Reviewing foreign portfolio investment trends for the year, we note that foreign inflows outpaced outflows in 2017, with positive net flows sustaining from March 2017 and peaking in August 2017 on the back of positive economic data releases, such as the second quarter GDP report and rising PMI readings. New bond issuances increased over the previous year. Bond yields gradually moderated from 2016 levels amidst easing inflation and greater FX stability. Yields across various tenures declined between 0.4% and 1.5%, and market turnover declined by 26% in 2017 as investors sought higher returns in alternative product classes. Bond raising activity was dominated by the federal government of Nigeria as it continued to leverage the capital markets to finance the MTEF and rising fiscal deficits. The year 2017 saw the listing of the $1.5 billion FGN Eurobond, which was approximately 8 times oversubscribed in international capital markets. Other pioneer issuances during the year included the maiden 5-year $300 million FGN Diaspora Bond, the 100 billion naira FGN Sukuk Bond, and the record-setting 10.69 billion naira FGN Green Bond, which is the first green bond issued by an African sovereign and the first climate bonds certified sovereign bond ever issued. The NSE ETF market review. The NSE's ETF market witnessed increased activity across key metrics in 2017, recording a 272% year-on-year growth in trade volumes, 33% growth in turnover, and 39.5% year-on-year increase in market capitalization to close the year at 6.69 billion naira. This is attributable to growing adoption of the asset class by investors and asset managers, as well as new issuance in 2017, the Stanbic IBTC Asset Management Limited Pension ETF 40, which is the NSE's first pension-based ETF. With regards to market performance, the Vertiva Banking ETF posted the highest return of 70% in the ETF market segment, closely mirroring the gains recorded by the banking sector and its benchmark, the NSE Banking Index, while the New Gold ETF, which tracks the spot price of gold, posted the second highest return of 47.87%. The sector-based ETFs tracking the NSE banking, consumer goods, and industrial sectors were the most actively traded ETFs.
He also gave insights into what the NSE outlook for 2018 is.
The NSE 2018 to 2021 strategic plan. In keeping with its objective of taking a rigorous and adaptive approach to strategy execution, the NSE reassessed its strategic agenda in light of changing dynamics in both the operating environment and the global exchange landscape against the backdrop of the Fourth Industrial Revolution. This culminated in a new corporate strategy for the 2018 to 2021 period. In redefining its strategic ambitions, the NSE selected 3 key focus areas to pursue to enhance our global competitiveness and appeal to stakeholders. They are based on 1, satisfying our customers, 2, boosting our retail segment penetration, and 3, enhancing our organizational agility, enhancing our customer focus. The NSE is taking a greater focus on delighting our customers across the value chain. We are committed to better understanding and meeting our customers' diverse needs by leveraging adaptive new technologies, and will be carrying out a series of activities aimed at supporting this objective. 2, focusing on retail investors. The exchange will increase its focus on growing retail participation as a key component of a well-functioning and resilient market. To this end, we will be partnering with market stakeholders to deliver a number of financial literacy and investor outreach initiatives which align with existing plans, such as the Capital Market Master Plan and the National Financial Literacy Plan, as well as undertake new initiatives that can help drive a more radical change.
The capital market leader also highlighted the strategies and plans of the Nigerian Stock Exchange.
The outlook for the Nigerian capital market is encouraging. Indeed, to some extent, political activities and currency movements will have an effect on the market, but we expect that such impacts will be short-lived, and the performance of the underlying business activities will ultimately determine market performance. On its part, the NSE is on track to become a more agile and flexible demutualized securities exchange. We are hopeful that the demutualization bill will be signed into law in 2018, and are working assiduously with our advisors to fine-tune outstanding aspects of the demutualization project, as well as providing clarity on the process via regular engagement with all of our valued stakeholders. We expect that the year ahead will also see the launch of exchange-traded derivative instruments. This will not only help us meet our objective of facilitating order flow across various asset classes, but will offer our ever-increasing community of domestic and global investors a greater array of products to diversify and manage risk. We will also continue to engage with the government on privatization and listing of state-owned enterprises. We plan to maintain our role as an advocate for the adoption and implementation of market-friendly policies required for sustainable economic growth. X-Academy will continue to be at the forefront of driving capacity building across Nigeria and the rest of Africa. Given the growing demand for innovative products and solutions, the NSE will leverage on its network and knowledge to take Africa's financial markets to greater heights.
Mr. Oscar Onyema speaks further on the role the Nigerian Stock Exchange played in the positive performance of 2017 and how it plans to sustain it in 2018.
The role of the NSE management really was to keep our heads down and focus on executing our strategy in spite of the commodity down cycle that we were experiencing. We wanted to make sure that we continue to maintain confidence even though we were experiencing economic challenges. So that was one. The second thing we did was that we engaged actively with policymakers to canvass market-friendly policies around FX, around fiscal policy and catalyzing spending in the economy. We also engaged to see how we can improve on savings and investments. And we introduced a number of new products like the federal government savings bond, which we proposed to the government, and the green bond, which we also proposed to the government. Finally, we tried to drive a lot more knowledge in the marketplace. You know, we this year reached a lot more people than we had done in previous years. So those are some of the things we did to position the market in such a way that we can take advantage now that the down cycle is going away and we're in an up cycle.
The tide seems to have turned for the Nigerian Stock Exchange in 2017, with a remarkable market performance as the top 3 outstanding stock exchanges in the globe. 2018 already shows bright prospects, with the Nigerian Stock Exchange already topping the global charts in the market index and a 15 trillion naira capitalization in mid-January. Market analysts, correspondents, and stakeholders will be watching to see if this positive trend is sustained.